are going to be talking about due diligence. So due diligence really just means after you have found a company, you are starting to understand a little bit more about the nuts and bolts of the company. And so there's so much to learn, so much to really uncover that you really have to put in some time and effort into it. For those of you who are watching live, please make sure to also just put your questions in the chat. We will be answering them as we go along. So in terms of step one, right, just initial screening, you go to a Republic, for example, and you click on a company and you're like, okay, let me dig further. This looks interesting. This is an industry that I like. You know, my investment thesis is all around, let's say, sustainability, and this is a great fit for that. Let's take a step and kind of understand a little bit more of the different types of things that you have to think of. So think about founders, think about traction, think about mission, and then we're going to go into a checklist around things that you should be thinking about. So in terms of founders, does this founder really have the skills and vision to succeed? That is a pretty loaded question because everyone brings their own unique perspectives. But what I think makes a founder really special, and this might be just my opinion, and you could have something different. Maybe just put what you think in the chat. But it really comes down to what are the experiences and background that this founder has that gives them that unique insight into this company that they're creating and this industry that they're in that will allow them to actually, create a unicorn. And so, and for those of you who don't know, unicorn is a company with $1 billion valuation, right? So how will they get to a massive scale using this insight? And that's kind of what we look for at Republic. For those of you who don't know, Republic is a platform that allows anyone to invest in startups and for startups to raise up to 5 million. But it's a very curated platform. So we actually only accept about 3% of companies that apply. And so the way we look at companies is, for dedication, the founders, how much have they done with the resources they've had at their disposal, overall diversity. There can be so many overlooked founders, or they're in geographical locations that might not be the hotbeds for investment. Also experience, quite frankly, like what experiences have they had that will inform them of form their decision making in creating this company, the overall vision, the track record, et cetera, just all these other things that you should think about holistically about a founder's experience. Diversity really just means around that diverse perspective in the space. And don't be afraid to ask your questions. We'll go through a quick little demo in the Republic website just to show where you can actually ask your questions to the founders. Another key thing is traction. So first of all, you have to think of yourself of like, what types of companies am I really excited to invest in? And how much traction do I expect? Sometimes you are a pre-seed investor who might invest in something pre-product and pre-revenue, or you might want to invest in a company post-product, so they've already created like an MVP and everything, but pre-revenue, so that they don't necessarily need revenue metrics. You might just want to see that something exists. Or you're an investor who wants to see a company that already has a product and already has revenue. And so you have to understand kind of what your risk profile as an investor is. And then from there, say, have there been measurable progress, the growth, social proof? They might not be making revenue, but they might have had a Kickstarter in their past that has raised millions of dollars because there's a demand and there's product market fit. So it's really about understanding those further. Now, this next thing is the company backed by other notable investors? So are there any VCs that might have invested in the past? Did they manage to get a good price around it? Those are some just social proof metrics that you can also potentially look at. The next thing would be around mission. So how is this startup going to make an impact in the world? This is also, once again, what you think as an investor, if this is something that's really important to you or not. Does this company have a mission you can get behind? And I think this is a trend that we've been seeing, especially with the upcoming generations, where you really vote with your dollar. You really want to support something that is doing good for the future. And so really just making sure that, if that's something that you consider, to just overall initial screen it like this. Now, we'll take another step around this checklist that we have. So there's about 7 different things we want to consider. So, and this is, by the way, how Republic approaches it, but this could also be applied as an individual investor as to how you approach it as well. So in terms of the business model, how does the startup make or intend to make money, right? How are they distributing this product, and what are the margins? So like margins, just for simplicity's sake, is really just how much revenue is coming into the door. Yes. And at the same time, how much revenue is coming in through the door, and at the same time, how much does it cost to make? And so it's really that profit margin that might be interesting to take a look at, especially in different industries. So, and also how much can it make? Is this more of a lifestyle business, which, will be able to just sustain the people who are running it and that's it? Or is this something that could be scalable and a massive opportunity? So that's first and foremost, just taking a look at the business model. How are they making money? Like, we actually just talked about this in a prior conversation where some founders forget to highlight that. They just focus on the story, and that's fine. But at the end of the day, this is an investment, and you really want to make sure this actually has potential to make not only the founders money and their communities and all that, but also, yourself. Second thing is social impact. You always look at how big is their impact and how will they fulfill their mission. Market is another really big one around how large or disruptive can this business be. That is something that I think, take the Uber example, right? In terms of Uber, there was such a demand for taxis, but it also required, quite frankly, a shift in consumer behavior. Smartphones were just coming out. People were starting to use more and more apps. There was this need to get taxis as quick as possible because, it's that convenience factor that people really wanted to see as the world became more, technologically integrated. And so this was a massive opportunity back in, 2007, 2008, when it was first coming up, because as these consumer behaviors were changing, the market was increasing for this type of company. So that's a great example around overall market. It might not be there right now, but there are shifts and trends in the behavior of folks and just overall the industry that will allow for this growth in the future. And what advantages do they have over their competitors? That's something where sometimes you can be the first mover in that market, right? Uber versus Lyft. You could also be, as we mentioned, founders are important in understanding those particular insights that will allow them to potentially maybe get more customers at a lower acquisition cost, right? And so those are the types of things that you really have to think about around market. Technology is important. We are always looking for great startups that have proprietary technology that isn't necessarily knocked off, but at the same time, really, how are they leveraging technology to solve a problem? There was a really great quote from one of our previous speakers in another masterclass around, if it's a nice thing to have, it's a vitamin. But if it's a must-have, it's a painkiller, right? So if this problem is really so important, how are you using technology to be a painkiller and not just a vitamin, right? And then is it unique or difficult to replicate? That's that defensible moat that we're talking about in terms of technology, where you can really make it so that other competitors try to knock you off might not be so successful because the technology you have is powerful. The team, as we already talked about, founders are very important, and at the same time, their ability to recruit, their ability to bring the best people they can around them is also incredibly important. And so have they found the right people in their appropriate roles, including experienced advisors? That's something that I think people don't realize either, is that advisors, they take a little piece of equity, right, in the company, but at the same time, they bring their skill sets and expertise and network to really launch these startups and accelerate their growth. Just overall fact checking. That's something that Republic really does, right? We make sure that everything that they have given us is true and accurate, and we overall just verify key facts, contracts, and investments, and do some background checks as well. Last but not least is runway. So for those of you who don't know, runway is essentially how much capital they have in the bank that will allow them to sustain before, declaring bankruptcy. And so we actually look for about 4 months of runway so that, the startup can actually live to like pass the Republic campaign itself, but also just in general, how are they thinking about their cash burn, right? How much monthly burn do they have? And is it sustainable over time? And are the funding goals reasonable for the startup's runway is important. Last but not least is the final decision, right? If this is a company that checks off your checklist and you're like, this is an incredible opportunity, and I do want to put some money, decide how much you're willing to spend, right? This is something where we always say, first make sure that your personal financial health is up to date, right? Whether you are paying debts and all of that. This is only when you have disposable income where you can afford to lose it, because as we mentioned before, startups are high risk, but they're also high reward. And so making sure how much you want to invest and at what valuation is key. Also, write down your reason for investing. This is something that we want to hammer home. So write down your reason, because the feedback cycle of an investor is so long. You will not get to know whether or not you're a good investor until you see the results. And those can take anywhere from 5 to 10 years. This is why startup investing and just overall private company investing, it should be just one part of your portfolio. And the reason why is because this has much longer term horizons, right? And so you really have to write down, even if it's just in a spreadsheet, right? As simple as, the company, the industry, how much you invested, at what valuation, and why, right? Was it because the founder was just so incredibly compelling that you had to invest in it, whether, when it was pre-revenue? Or was it more about how they already have 2 million in revenue and they're projecting 9 million now, and it seems like they already have great partnerships and you want to be a part of that? Or last but not least, this is such an outrageous idea that you want to be a part of this movement, because if it does pan out, it would just reverberate around the world. So those are the types of things that you really want to write down, so that you have an approach and you can learn from your experiences. If some of them went to zero, one, that's normal. But then two, you can also understand, okay, they actually did not succeed because of founder tension, or they did not succeed because of, they ran out of cash, right? Or did not succeed because they didn't bring the right people around them. Those are types of things that you can learn from and maybe do some more digging as you go along. So this will all help you out. And then, so let's stop the sharing now. What I'm going to do too is just give you a quick demo around the website so that you have a clear sense of what we are talking about, so that you can think through more closely how you want to look at companies. So if you just go to republic.co, which I will share my screen now. Awesome. So here we have the website, as I mentioned, and what we'll do here, and by the way, this is not investment advice. We are just trying to do this for educational purposes. So I am trying to find something that, say, Manta Biofuel, right? They've already sold out. They are sustainability. So let's take a look at this, right? The way that you see it is through the pitch that they have. And as you scroll down further, you're able to take a look at all the different angles that this company has around their team and traction. Then you go to the discussion page, which, as we mentioned, this is the place to ask your questions, right? So you can also learn from others who have asked their questions and see, okay, I didn't think of that. Let me ask a follow-up question. And then we have the founder here who has already answered some of those. So last but not least is updates. So they actually have, just updating their investor base on what they need, what they've done, and how you can best support them. And last but not least is reviews, which just really talks about, okay, here's why I've invested this much and why exactly have I done this. So we have all these things here. If you haven't done your own Republic profile, we definitely suggest you do so. And then start asking questions. That's the first and foremost thing that we want you to take away here, is that as an investor, we all have different perspectives. And so take that time to really screen, due diligence, and ask these questions on our platform so that others can learn from you, you can learn from others, and this really becomes a community. So I'll stop there. I feel like I definitely have missed a lot of the chat. So I will say, however, Heather's here and she's been great at supporting. So we will, give me 1 second, and great. We will now have the honor of meeting Anita. So just for a quick background, Anita is part of GSV, and she is the chief of staff to the CEO of GSV Asset Management. Anita's experience really encompasses roles as an entrepreneur, as an investor, advisor to global companies and technology sector. And prior to GSV, she was an investment professional at Vantage Point Capital Partners, an investment consultant at the Three Kings family office, where she invested in early to growth stage investment companies in consumer, enterprise, and energy. Anita is also the founder of a vertically integrated plus-size women's wear retail startup, an invaluable experience that contributes richly to the perspective she brings as an investor and advisor. Anita, please join us here on stage. To the 250 people that are here. Wow, love it. Can you hear me?
Yeah, Cheryl, I'm trying to
let me make you co-host now.
Oh,
love it. Okay. We do this every time. We need to figure that out. But thank you so much for being here. You look amazing, and I'm sure everyone is going to love you because I love you. So this works.
Thank you. Well, thank you so much for having me, Cheryl.
No worries. So let's just start with your story. You have done so much, right? And I believe that we can all learn from some of your experiences. So just looking back at your career, what do you think were the moments that were most pivotal in your journey that have helped shape who you are now professionally as an investor?
Yes, thank you. Thanks. So first of all, I'd just like to say that I'm honored to speak today at Republic's Masterclass. Thank you for inviting me to participate. I'm a huge fan of your company. I'm a huge fan of you, Cheryl. I appreciate everything that you've done for us at GSV. And so I'm really happy to be here.
Don't make me cry.
Oh gosh.
It's Friday. It's like that. Sorry. Anyway.
Wow, this is turning out to be Oprah. But anyway. I thought about that question quite a bit. And really, if I have to think about pivotal points in my career, I really have to think about my life as a whole, because I think that there were so many things that happened that kind of shaped who I am and shaped the trajectory of my career. And the first thing was just my experience growing up. I grew up in India, and my father was an entrepreneur. So from the day I was born, I was in a household where there was really no separation between work and life. You know, we had packages being shipped at home, meetings being held at home, phone calls being made. We were asked to deliver things. It was just quite the entrepreneurial experience. So I grew up observing what it took to build something of value. And I was just really in awe of the determination, the relentlessness, the sacrifices, the mortgage on the house, everything that it took. You know, it's not an easy feat. And so with that, I think I have a huge respect for entrepreneurs, and it just comes naturally from watching my family move through it. In addition to that, I mean, I truly believe that entrepreneurship can help change people's lives. My father came from a really poor family in a small village in India. And so it helped us and our family move out of poverty. It gave us a real chance at life and, a great future. And so So I believe in entrepreneurship. I just really respect entrepreneurs and a huge supporter of them. Another pivotal point in my journey was when I was in my undergraduate years at an engineering college in India. It was called Manipal Institute of Technology, MIT we called it over there. And basically over there, once you get into your 20s in India many, many years ago, you're deemed of marriageable age, and you're kind of set down this path of like having an arranged marriage. And I decided, okay, that was not what I wanted to do, not based on what I'd seen, not based on where I'd been. And so I basically put my head down and studied and said, I'm going to get into the best colleges in the world, and my parents are not going to be able to say no. And so, my first admission acceptance came through, and it was Ann Arbor, and it was pretty good. And I went up to them and they were like, we haven't heard of Michigan and we haven't heard of Ann Arbor. And I was like, oh my God. And so then I got really lucky. The stars aligned, and I got late admitted into Stanford in the electrical engineering program. And that letter came through, and I was like, you can't say you haven't heard of this. And so, what
I
learned
love that, by the way. Oh my God. Education, key to success, lines up with GSV as well. But like, oh my God, wow, incredible story.
Yeah. Michael Moe, who I work with says, education is life's original accelerator. And I so believe that. It's shaped my life in so many different ways. And I think the third thing that I've learned is, in this last year and a half in working with Michael basically predicted the upcoming ed tech revolution in 1996. He wrote a paper called The Dawn of the Age of Knowledge. He saw that with the digital tracks being laid by the internet, he said that, education is basically going to blow up on the internet. And they had many, many naysayers over the years, and people, didn't believe that it was going to be anything more than a nonprofit. But you just have to believe in yourself, put your vision out there, and just keep your head down and keep going. And what I learned from that experience is that, you just have to have the courage to keep going. And so those, I think, were like pivotal learning lessons in my career, in my life, and that have shaped me as a person that I am today.
I absolutely love that. And that's why I think it's so important for so many investors to have all these experiences, understand the true merit of like what founders are doing. And it's funny, your dad was a founder, and you saw how masochistic this was. And then you were like, I'm going to also be a founder. Like, explain that thinking, like you're also a founder. So how has being a founder and an investor too provided insight into the way that you analyze or assess potential companies? Like, how has it changed the relationship with founders as well, who pitched to you?
Yeah, absolutely. And so surprisingly, I think it was just such a such a deep experience for my dad that when I told him that I was quitting my job to start my own company, he basically picked up the phone and said, don't do it. You have a great job.
It happened. Same, actually. When I joined Republic, my mom was like, you're taking a pay cut to join a startup? What does this mean? Like...
Yeah, exactly. Yeah, I think, they fear for us. I mean, it was all fear. It was, they didn't want us to take the pain, and it was painful. Yes. And so I think, so I started my company. I was at Vantage Point. I was an investment professional there. And we were transitioning from looking at clean tech companies to e-commerce. And I came across this really large market that was very underserved at that point. It was a plus size women's wear market, and traditional fashion houses were not serving that market. And I said, why not apply the new models of the internet, which is the direct to consumer models, to this significantly large underserved market? And so, I set out, I knew nothing about retail. I knew very little about e-commerce, because I was essentially covering things like solar and wind and LED. And, I could talk to you all day about an MOCVD machine, but I didn't know how clothing.
Let's not. We don't know what that is.
Well, I'll tell you one day when we meet over drinks.
One day, yes.
And so I quit my job. It was incredibly scary to do that. That step was huge. I think I vacillated for a long time. but I decided that there was no time for, I couldn't do it later. And I started my company and learned everything from the ground up. I believe that for me personally, I know that this is different for different investors, but for me, it was a tremendous experience in giving me insight into what it took to build a company. Previously, when I was at Vantage Point and founders would come and sit across the table, I think there was not an appreciation of the sacrifice, the commitment, the mental heft that it took to actually go out and build a company. And when I actually did it myself, I was like, oh my God, I would never, I think you have to think twice before you reach out to a founder and say, have you thought about this or have you thought about that? Because in effect, a founder they never stop thinking about their company. They're always on. They're always thinking about how to push it forward, how to do this, how to save yourself from running out of money, how to, so it gave me a huge amount of empathy for these founders. I think a huge amount of respect for them, which I had from my earlier days. It taught me how to evaluate, for lack of a better word, if someone had it within them to push through all of the hardships that it takes, all of the obstacles that you hit in the early stages of your company. And then it also really taught me how to look at the big picture and then quickly determine where are the gaps, what are the levers one should pull, how important it was in certain industries and in certain business models to have distribution figured out while you were figuring out product. That was one big example that I learned while I was building my company, was that, when they were building PayPal, they rode off the back of the eBay retailers, right? And so they had that distribution network to push out to. They were really lucky to have that as the first flight for their product. And so all of those things really, came, I began to understand all of those pieces of putting a business together much better. And it helped me, I believe it's helped me become a tremendously better investor.
So basically everyone should become founders. Got it. No, I'm kidding.
And again, I've met investors that say that it's not needed. And there are fantastic investors like my heroes, like Bill Gurley and others. And Michael Moe is an entrepreneur because he's built GSV. So in some ways you're an entrepreneur as you build your VC firm as well. Mm-hmm. But, for me personally, it was a fantastic experience. If there's someone that is very early on in their career and looking to get into VC, my advice to them would be turn around and go join a great startup right now. I think that for a couple of years would teach
Republic
you.
is hiring. Republic is hiring.
There you go. Go join Republic.
Wow, love this. This is a whole
work with Cheryl. What could be better than that?
Heather, who works on my team, might have a different perspective. No, I'm kidding. I'm kidding. It's all love. It's all love. Don't worry. This is incredible. By the way, guys, please ask your questions in the chat. We want this to be as interactive as possible. We do have
Heather just said she loves her job.
Oh, yay. I pay her to tell that though. So please ask questions in the Q&A section. And then if you have other things, please put in the chat. If you want to clarify some things, we have about 3 more questions that we've prepared, and then we'll go right into your questions. So back to the topic at hand, which is due diligence, right? We have covered really at a high level some of the ways to assess startups because they're all different, and so we just wanted to kind of create a template around how people can think about it. And so what was your initial experience, like first performing due diligence? And then from there, how have you grown and what experiences have helped you get there?
Yeah. And so my first experience in doing diligence was at Vantage Point. That was my first real experience. And I basically, so what I did over there, I think as anyone that's new to investing, was that I essentially jumped on as many deal teams as I could. I sat in and listened on as many, deal meetings. I wrote up investment memos for as many companies as I could, because I thought that this is all about pattern recognition. And if you don't have the data you can't form the patterns. So first, my mission was, okay, I'm going to go out and personally build out this data, and that was by participating. And when I do diligence at that point, we were doing heavy science type companies, right? These were clean tech companies. And so it was pretty rote and pretty mechanical. I wish I had used more of my first principle skills and thought through out of the box. But you have your standard diligence checklists. So as that process evolved, what I figured was that it's so important for you to have a macro view, not only on the industry, but just a macro view on what's happening in the world and how things are moving, and how a collapse in one country might affect something else in another country. And I'll give you an example of that. So for example, when we were investing in solar companies over here in the US, things were looking tremendous. All of the government rebates and all the programs were pushing solar out factories' doors. But then what we realized, what we saw happening in Asia and in other countries, China especially, was that China suddenly subsidized the prices of panels. And we saw that coming. If you were actually reading the tea leaves, you'd see that they were giving away MOCVD reactors to make LED chips. And then they started to subsidize the pricing of solar panels. And so what that did was it put price pressure on panels in the US, and it kind of just really collapsed the financials of these companies and these high capex companies. And so it's really important. I figured, so I grew from just going through that rote checklist to really understanding the industry, understanding a worldview of what was happening. I think that that's critical. Over here at GSV, we have a framework that we've developed, and it's called the 5 Ps framework. And so basically, essentially what we go through is, you really understand the people. That's the most important thing when you evaluate a company. And you have to understand, obviously, you look at their character. Do they align with your values? The people that they associate with, do those people align with your values? And then you look at, do these people really bring an unfair advantage to the problem that they're trying to solve? Does this person have an insight into a problem that they're trying to solve? And so an example of what I'd heard of a solution was this Israeli fighter pilot was flying his plane, and he was just aghast at the type of weather data that they would get as in preparation for their flights. It was never accurate. It was not.
It wasn't that much. It was just like, there might be some winds. It turns out.
Yeah. A few clouds, winds, maybe a bird or two. But there wasn't that much. And so he quit. And, he had such tremendous insight into what was needed as a fighter pilot, and so he built this huge company that collected incredibly detailed weather data, and now it serves so many different purposes, including farmers and including many different industries. And so having that unique insight really helps you. And then so that's the people piece. The second piece is a product. And so product is, what is your unique selling proposition? What is your claim to fame? Why is your product different, right? Is it great? Is it a terrific product? How do you envision your product developing? The third piece is potential. And here we look at market, size of market, and how much is really your share and how much of that you can grab. The fourth, predictability. And that revolves around business models. What type of business model is this? A subscription that shows that you can gain, it's a steady cash flow, revenues into the company, et cetera. And then the fifth piece, which is a new one, the fifth P, is purpose. And we believe that this is, just really critically important for companies, especially in this new age where it's so incredibly important to tie purpose with profit. And I don't know if you saw, but recently Michael Moe wrote a book called The M Corp. And this really outlines what we see as the future of companies, which is, companies having the head of a for-profit with the heart of a nonprofit.
So I love that. We also just changed our motto to profit to the people. So, we do want people to, profit and share the gains of, especially if they're consumers of these companies, but at the same time, really driving change in the future with their dollars, which I think is just so important in the crux, and kind of invest in the companies that you believe in, right? And so that all makes sense. Did someone ask for the name of the company of the fighter pilot? Do you know what the name is?
I don't have that. Someone asked, yeah, I'll find that and I'll send it to you, Cheryl.
Yes.
I have
okay.
I'll send that to you.
Sounds
One
good.
other thing, if I could just add one more thing, and I think I read this, I think this is on one of Bill Gurley's blogs, which I highly recommend that everybody read every word that he writes. But basically, he said, and this changed my mind, this was a huge change for me. He said, as investors, we tend to look at what's wrong in a company, and we are very negative because many of the companies we cannot invest in, just given our fiscal responsibility to our LPs, right?
Yep.
And so we kind of say, no, 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 no. And I feel like I sound like I'm talking to my daughter, but then, I think the big thing that in reading a blog that he wrote was that you say, what if this idea becomes big? What if all of these pieces come together? Can this be the next unicorn? Can this be a huge company? So, that's a huge piece of advice that I'd like to give to people, and not just like, look at how the company can fail, but just look at how it could possibly succeed. I think that that's critical.
It's so hard to be positive sometimes. We're always looking at so many companies.
Yes.
Yeah, it's just,
that's so true.
It's definitely, I think repetition is key, like seeing as many companies as possible and really understanding what we mean. It has to just cement, like we can show you as much as we can, but there's nothing that replaces like doing it, right? That's why I think it's so amazing. Like Republic right now has about 100 current live offerings, which is crazy to me, by the way. Like this time last year, we did not have that level. And so you have so many different companies from all different sectors. So you can also kind of take a look and see what you're personally interested in. Like for me, I would never have thought when I first started 3 years ago that I was going to be focused on like healthcare through femtech and silvertech, because I like it made no sense to me. But I personally, like I wasn't a science person. I wasn't like, but I think what made it real for me was the fact that these are two things that impact my life, right? Femtech, which is improving women's lives, and then silvertech, which improves the lives of the elderly. And I live with my mom, and I get to see her, age every day. And I want to make sure that she has quality of life that she needs in order to succeed. And same thing for me. Like, I feel like we're all, every day we get older. And so like trying to make sure that we make the most and support as many companies as possible that are really tackling a silvertech is important. So we're going to stop here with just maybe with one little piece of advice, Anita, around, what's your guiding advice for young people who want to build out their business acumen and investing mindset? And then we're going to go to some of your questions.
Okay. Yeah. Well, so, I would say the most important thing, if you want to be an investor, I believe, and this is what Warren Buffett says, it's not rocket science, it's to read. I mean, you need to understand the macro, you need to understand the industry, you need to understand what's happening in the sector. And then as Cheryl said, perhaps just go and expose yourself to as many companies as possible. Watch pitches. Pitches are available, I mean, for free everywhere. You can just Google it and go watch free pitches. Take a few public companies, because I think that that's really interesting. I did an internship at a hedge fund while I was doing my MBA. And, the thing that I learned so much from that experience was to actually take a public company and all of the information that is available in their 10Ks and 10Qs and just like kind of track the stock price. And then I would say, just maybe even create like a model portfolio of your own and track a company or track a series of companies and just record in an Excel spreadsheet as to how they're doing, what they're doing, listen to, what their revenues were. And all of that information may not be available, but just to the extent that you can, track it. And the last thing I'd say, and I have a teenage daughter, and she basically put some money in the stock market, a little bit of money. And she, unfortunately for us, listens to TikTok advice on buying and selling stocks too. And so a few weeks ago came into the room and said that she'd sold Zoom and bought AMC. But I think that that's okay. I mean, we almost fell off our chairs, but I think that that's okay because I think
Oh, guys out there, you want to see? Do you guys like AMC? Would you sell Zoom for AMC? Just let me know in the chat. But it could go either way, to be honest.
Well, I don't know. We'll have to have a longer chat about that and MOCVD. But so yeah, so basically, I think if you can do that, put a little bit of money into a few stocks, because I think just having your skin in the game, that's when you really get to to observe things, and you can engage yourself really well.
I love that. And I think people were recommending Dogecoin. So it's actually neither Zoom or AMC.
Buy Dogecoin. Isn't it too late to buy Dogecoin?
Is it? Is it too late for Bitcoin and
are we waiting for another tweet by
Elon Musk? Yeah, if it moves markets, yeah, it's crazy. But no, I think that those all make a lot of sense. We will just choose 1 or 2 questions, and I know you have so many, guys, so thank you so much for asking. Hi Anita, this is from DT. Reflecting back on your journey, what is the one thing you wish you had known before getting started in startup investing? The one thing that you were like, oh, this would have made my life so much easier. Is there something in particular or not?
I think it's not something that I wish I had known. It was something that I wish I had done. So basically, it's around sourcing and going out and meeting people and meeting founders. I wish I had not, I hadn't held back in doing that, because there were so many opportunities, so many forums, so many meetups. And like I said, investing is a numbers game. It's about how much you take in. It's all about pattern recognition. And so I wish I had put myself out there a lot more at events, at pitch competitions, meeting founders, meeting incredible people, because the more you collect this data, the more your AI brain can process it and basically help you become a better investor.
I love that. Yes. And Republic may or may not be having some demo days coming soon. Anita, you want to plug in some GSV content here? This is your time to shine.
Yeah, of course. Yeah, you should. We run something called the GSV Bootcamp. Our next bootcamp is coming up in July. Cheryl is a quarterback. Hopefully she'll be a quarterback again this next time. No pressure there, Cheryl, no pressure. But,
no pressure at all. I love it. I would love to.
Yes. And so, so come to our boot camp. It's a tremendous way to get to meet other entrepreneurs, to learn about how to build startups, learn about due diligence. And then we obviously have Cheryl there. So that's a big bonus as well.
Aw, you're so nice. Obviously Republic is trying to do as much as we can around content and education. So we have demo days, we have masterclasses, we have Clubhouse. So stay tuned. If you just go to republic.co/events, you'll see a bunch of other things on our end. So we actually have just one more question, and then we'll let you go, because you unless you guys have more, I don't know, like Anita, maybe your time permits a little bit, but I think this one was one of the shorter master classes. But this is from Devin. So can Anita talk about how you and the team structure their deal memos, and how do you use them really to optimize deal analysis? Like, what data points are they tracking? How do they use to optimize what they're doing? Like, is there anything particular around investment memos that you think people should be doing, should not be doing, or are they even necessary sometimes?
Yeah. Well, I don't think that, we use a pretty standard structure for deal memos. And I think really it depends on the stage of company that you're looking at. So for an early stage company, if you're evaluating an early stage company, you can write 6 pages on the financials of the company and how great it's going to be. But at the end of the day, you have to realize that at a very early stage company, you're really betting on the founders, right? And so you at a very early stage company, you pretty much use the same deal memo, which is, the business opportunity, the financials, the product and why it's different, and all of those various things that you look at, the valuation, etc. But at the very early stages, I'm not going to go out and spend like 5 days diligencing whether these financials are going to meet their mark, because I know that they're not. It's all made up. So I'd say at the early stages, know what to focus on. And very early stages, focus on whether who are these people? Do they have a unique, unfair advantage that could take this company places? What if all of these links came together? We said no to Uber a long time ago when I was at Vantage Point.
Whoa.
That
Okay.
was
Tell us about that. What?
Yeah. So, huge lesson. I mean, we couldn't see it. No one could see the fact that people would want to take their cars and drive others around. And this was in 2008, right? Or when people were talking about it, I don't think it was Uber, but it was another company that was similar to it. And so basically, from there, I'd say, yeah. So depending on the stage of the company, formulate your investment memo based on what's important at that stage. So I'd say at the very beginning, focus on people and the idea and the market. As you move forward, look at the product and what's been done and how the market or the customers have reacted to it. And then as the company grows, you really have to look at the numbers, and then it becomes more of like a growth stage play where you look at the financials and the metrics. There's so much data, and you can actually grab onto something and look at it.
I love that. You touched up on so many things actually that I wish we touched up on before, because now we're ending. So now it's like, one, investors don't know everything. We don't know the future, so we could be wrong. Right. And I really love Lessimer's anti-portfolio, which you go and you see all of the companies that they missed out on. And these are like huge companies that would have returned their funds many times. But investors, we at the end of the day just choose and use and make the best decisions that we can make using our experiences. So that's one. And then two, it's really about, thinking about the types of stages, right? So if you're pre-seed seed, there's not that much traction to go off. Whereas like if you're more on the growth stage side, then you can kind of look at the numbers and seeing and kind of predict more accurately if this company is growing at the rate that you want it to grow. And so all these things are important. I did drop a couple of examples around memos. This is also through Bessemer, which was really cool. We also have our guide to angel investing, which we wrote after the last masterclass we did. It's a little bit dense. So if you guys have any feedback on that, feel free to also reach out on it. And then last question, Anita. This is from Felicity. Thank you so much for the conversation, Anita. You mentioned that GSV aims to invest in companies that truly have a purpose. So how do you stay focused on investing in these social impact startups without letting their financial performances affect your decisions?
Well, I think so what I said was that we look at companies that have, the heart of a nonprofit with the head of a for-profit. So we look at both aspects of it. And so if there is a company that we feel is a tremendous company, but that really doesn't have a mission behind it, and the founders are not driven by some larger mission, we may not invest in it. If there's a company that has just pure a mission-driven company that really doesn't have, the financials that we require to see because, again, of our fiduciary, responsibility to our LPs, we will not invest in that. So we're really looking for a mix of the two to come together.
Yeah, that's always something that we see as well. You can't do good and also make a boatload of money. So love to see it. Anita, I will end it here because I feel like we went so much farther than and asked so many more questions than we thought. So once again, thank you so much for your time, your expertise. Being frank and candid is something that I love because that makes these sessions that much more worthwhile. Is there any last words you want to say? Plug anything? We already put your Twitter in there, so people can follow.
That's terrific. Yeah, terrific. Well, yes, please come to our boot camp. I'd love to see all of you there. 200 people. We're hoping, I'll go back check. Hopefully we'll have 200 signups today. And I see a lot of our boot campers in this session. So hello to everyone. I know that we become a family and it's terrific. I hope to see you back at Bootcamp 3. And thank you so much, Cheryl. Thank you. I'm a huge fan of Republic and everything that you do.
Oh, This is great. We appreciate you. Yes, go to the boot camp. I'm one of the quarterbacks. So, and at the same time, make sure that you join us for the next masterclass, which will be about terms. And we'll have a special guest. And besides that, I think we could give you get out of class a few minutes early. So appreciate you all. Thank you so much once again to all 250 of you. And I think it's just incredible, and it shows to the quality of these masterclasses, and also you guys as a community. So thank you, Anita. Thank you all, and have a wonderful rest of your day.